Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good evening. Ira Epstein of Linn & Associates with your financial market wrap-up for this Monday, the 24th of July, 2017, about 4:15 p.m. Central Daylight Time. So here we are with an interesting day. The NASDAQ up a little bit, 15 points, not bad. And by the way, it did get up nicely. But as fast as it got up to that high, it lost it. I mean, if you turned your head, it was gone. The Russell closed near the day's high, up a fraction on the day, and we were down in the Dow and the S&P. Now, the important part is that we now start the FOMC two-day meeting. We'll get it Monday afternoon, the results, the statement as to what it is, and we'll read, as usual, every word. No one that I know of expects the Fed to say that a September meeting is going to happen. You know, they can allude to it, but nobody believes that one's going to happen. At best, a December rate hike might happen. So, no, I don't want to say this wrong. No September hike on the table. There'll be a meeting, but no September hike. And maybe a December hike, but you can flip a coin. It's probably right now lopsided against it, but it could happen. There's a lot of data between now and, say, November before we know what goes on in December for a rate hike or not. What we do expect, though, is the Fed to hone in on the word soon, something similar to that, or maybe that exact word, as to when they're going to start trimming their balance sheet. That is about all that we're looking for at this point. Mexico and Brazil, their inflation rates are falling to the point where Brazil is talking about, now the analysts think, at least a 1 full point basis reduction on interest rates, and Mexico might be lowering theirs. Hard to tell what's going on, but it's a common problem everywhere. There's just not that inflation. The gold market down a fraction today, so silver. Copper market still strong, good Chinese earnings. Still a lot of games going on with world stocks of copper. Have to see where that all is going to come in and play. But as I continue on with the mini S&P right now, this uptrend line is still very much in play. The market's up near all-time highs that you can see, and that, of course, was the weekly chart. When we come to the daily chart, you can see that we're in a bit of a correction right now, and you can see that the pattern is still one of higher lows and higher highs. However, a move under 2462.75 will break the bull pattern that began actually with this low, and then once we made the higher low and got through this high, way back at the beginning of the month, the market went up that way. So I think the pros will be careful of that, whether or not this is a summertime pause in the market if you break there, or if you move on higher by moving back through the high. We're all going to be waiting to see. So it's not a quiet summer so far, I can tell you that. When we look at key moving averages, while they're supportive, in order to get down to them, you have to take out that 2462.75, which would actually negate the uptrend. It would still keep the bias up in the market since you're over that number. In terms of Bollinger Bands, it's done its job. The market has run against that number. It has stopped the market from staying over it for long periods of time. It's backed away from it. And you have an embedded reading which keeps the trend alive. So let's talk about the embedded reading and taking out this low. Until the red line closes under 80 and it's at 90.76, you can break in this market, and my work says the pros will be a buyer until that number's taken out. For the average trader out there, it's a rough one going in front of an FOMC meeting because you just never know what the reaction to it's going to be. The Dow is different. The Dow lost its embedded reading, and it's already in the corrective mode, but it's there. It's on its 18-day average. You lost the embedded reading. You corrected to the line in the sand. You held it. Now, the last break low was 21,416. You've got now down to 21,444. So you'll say, well, why is the trend down? This low took out that one. When we came back up, this rally high didn't take out that, and you're back down. That is why. So we've got the trend down, momentum down, but the bias of the market up, a confused chart. The NASDAQ still powerful to the upside. I frankly thought the market was going to break last night, and I was wrong in that thinking. When I took a look at what the Russell was doing, what some of the other markets doing, I said, they'll probably want to set it back a bit, and it still looks good. Well, it still looks good, and it went higher, not lower, so shame on me. Higher lows, higher highs, could be headed up to the 6,000 level before it's done. In the Russell, this market rescued itself. It was losing its embedded reading probably 75% of the day. At the end of the day, it came alive, got back up, and rescued itself. The market remains bullish until that embedded reading is lost. And if lost, all I'm looking for is a move back to the 18-day average of closes, unlike the S&P. If you get there, that number is 1423. Your last break low is 1420.10. In other words, the pros can still buy at that number and be in pretty good shape. In the VIX, as I've said before, even though you got the embedded reading, it's so hard when you have a number at 9 to get a 10% break. Think about it. That would take you down to, 8.5. So this working lower, and it's doing it. Just understand what it means. Once you get numbers instead of up in the 20s and you're down here, each 5% break, it adds another, 50 points to it overall, 0.50. And that's what you're looking at on these markets. So it's working and it's carrying the market lower. It's just because of the low level. It's having a hard time showing it on a chart as much as it normally does. In the T-bond market, going into the FOMC, why? Why even think about it? Overbought, uptrend, balking against getting to the upper Bollinger Band, might go back to the 18-day average of closes. Same in the 10-year. Overbought, comes up, just misses getting to that band. Wouldn't surprise me if these markets want to come down and regroup near that 18-day average of closes. The dollar index, it's a classic bear move. You've got the trend down, lower highs, lower lows. You're riding the lower Bollinger Band and staying to the right-hand side of it. You see it right here? It's not staying under that, and you have the embedded reading. Everything's still super bearish on it. Flip-flop to the euro. Riding the upper Bollinger Band embedded reading and staying underneath, again, to the right-hand side of that Bollinger Band. So these markets can correct, but if they keep their embedded reading, they're still quite strong. The British pound, no trend. I've got the market with higher highs, lower lows. It's now corrected, past tense in overbought condition, but the market has upside bias. Is there anything to do in it? Probably not. What's happening is the market's narrowing in these Bollinger bands, those black dashed lines, and trying to figure what to do from it. Japanese yen hit on Friday the upper band. Again today, it's having trouble there in an overbought condition. Closed a little bit lower after making a new high for this move as well. It's just in a key resistance area, and that always makes it hard to trade. In the crude oil, as I said, do not expect OPEC meetings to end up with a bear note. You shouldn't. They're not going to come out and say they're not going to do something good, especially the Saudis, knowing they got the Aramco deal coming on board soon. So therefore, they did what we talked about. I had mentioned before that there was word they were going to cut their production by up to 1 million barrels. Well, guess what? They now, in August, are going to cut further unilaterally, and they'll get to less than 1 million barrels than at that month last year. Duh. Not a surprise. Now they're saying, they got to talk to other members that aren't in full compliance. Well, we know there's a certain amount of cheating. They did not even talk about Ecuador, who said they're not going to stay with their quota level. They financially can't, admittedly. They're a very small country with only about 500,000 barrels, so it's not a market-moving event. Nigeria appears to be about a 1.8 million barrel production level. And what you got to watch here, if you start reading the reports, and I'm writing about it for my subscribers, I wrote a whole article tonight for them on shale production. You'd want to read that article because as much as people say, the rig counts, prices at $40, you put a rig out on a pad in the shale territories, you think they're drilling one well? They're not. They're drilling sometimes a series of wells. They don't get them all operating. They'll make it one operating. The rest, they're called DUCs, D-U-C-S. And what those ducts are is they're drilled, they're ready, but they don't produce. They have to finish up the hydraulics, they got to bring in crews to operate them, but they're ready to go just the way when the crash happened in oil, and all of a sudden we started getting those wells going like that. Guess what? We're getting be ready. And Schlumberger and all these other companies, what are they doing? They're saying, number one, they had great profits that just came out. Number two, they're going to expand. They're going to meet the demand for more crews. They're going to meet the demand for more of the hydraulic equipment. Just be ready, because as that keeps going, eventually, with all this talk, hey, the U.S. production's falling, our technology's great, now they're going to bring on more equipment. You get prices up into the 50, 55 plus area, you'll see a lot of U.S. production coming alive at that point. So maybe there's a cap that builds in there. In the crude, we got as low as 151.72 under this 151.90, confirming this area is a short-term top, confirming momentum is now turned down, and we're out of a trend. You're pretty much in a sideways market. This cooler weather that today hurt the grain markets, by the way, because of the 5-day forecast for cooler weather, that broke the trend in the nat gas. Interestingly, the grains will be interesting to watch tonight because the crop deterioration off the past week's heat was much larger than thought, so they should have a reversal to the upside off of today's losses. But those are some of the fun things of trading weather markets. I want to remind you, Linn Research, this is where you need it. Why? I'm mentioning grains. Believe me, our analysis, and I've already seen all the reports our boys just wrote, it's all over the top. You want to see what was going on, what the market's looking for. The big wheat tours from the Wheat Council kicked off today. They end up on Thursday. We'll find out what the Dakotas and Minnesota looks like and how that's going to affect that grain. And what about the WTIs? What about the meats? You know, you were a limit down in the cattle market today, both feeder and live. How do you play that? We write about this. We have our own staff. We're not going there and picking up Dow Jones news wires and this other stuff for that. Our staff writes it. We got a whole writing team here. We have our own meteorologist on board, not part-time, full-time on board. So if you're looking for news, well, you can pick it. And I'm only mentioning those markets because those are the hot ones now. Then I can go into the other financial markets and so on where we have people. But we cover these different markets. You get to pick and choose which one you'd like to see. Why not see what our customers pay for and what they get? We'll offer it to you for free for a short trial. Give us a call at this number. Go to our website to sign up for it, www.iraepstein.com. You can click up here if you're watching me on YouTube, or underneath us. It'll say, click here for Ira's free offers, and then the forms will appear. Do that on the websites that you see this on, and away you go. I'm Ira. You have a great day.